when it needs to go live. Welcome, guys. YouTube looks like you're checking in. LinkedIn is checked in. Everybody's going live like we're supposed to. Welcome, guys. You know what we're about to cover. We got some nitty gritty here. I got to make sure everything is set up. I got my checklist here. And we're going to get down and dirty on what's been going on with the housing market. You guys know what I specialize on. We're going to cover the REDFIN updates. We have to get into that and know what's going on with these falling prices. You see the title. It's exactly what we're going to cover today. We got the NAR, National Association of Realtors update. We're going to get down and dirty when it comes to that. Get into the mortgage rates and that whole thing. Then we got Google updates. I want to tell you guys exactly where we are according to Google when you search that. And then we're going to get into some updates from CNBC. That's exactly what we're going to cover. That's today's information. I'm going to give you guys some nitty and gritty when it comes to that because we're getting close. Rates are about to go up again. I told you guys what the Federal Reserve is about to do. It's all quantitative tightening. We have to be on point. You're either sitting on the sidelines and wondering what's going on, or you're really paying attention. And that's my goal today, is I want to make sure that everything is going to be set up according to that. Looking at this right now, got to make sure my system is set up the way it needs to be set up. So that's the question today. When we cover this information, and it's going to switch over, I want to cover these topics in depth. I want to make sure that we're good to go. You see my footage right there. That's me showing you guys right there that I'm live right there on that footage. So I'm just going to skip away from that screen because I don't want you guys to see too much. All right. So getting into that, we're going to get right down to the facts. When I cover some of the updates from REDFIN, I told you guys what's going on. REDFIN is, they have some great, there it is. Housing market updates right there. Prices begin to fall from record highs. Okay. And they're not joking. They're not joking at all. And it's crazy because with that information, when I dig into it, because I'm going to switch over, I think I'm going to get off of the video switching mode because I really want to read that to you guys. We're just going to turn that off for a second. And I want to get down to this and just really focus on exactly what they're talking about here. It's funny because, let's just change that screen size. There we go. Look at this. It says, inflation and high mortgage rates are taking a bite out of home buyer budgets, leading to fewer sales and supply gains. Of course, we know buyers set the market, right? So looking at this right here, you have to understand exactly who controls it. A seller can sit there and ask for whatever price that they exactly want. It's fine. You have a desired price. It is what it is. But according to this right now, we're down 0.7%. Record-breaking June peak during the 4 weeks ending July 10th. Sellers asking prices also came down 3% from their May peak, right? So that's a consistent drop right there. Home supply posted its first year-over-year increase since August 2019 as pending sales continue to slide, right? Inflation and high mortgage rates are taking a bite out of home buyer budgets. Okay, we all saw that 50% more than just 2 years ago, right? Look at this. This is what I really wanted to dig in. Look at this. Leading indicators of home buying activity. For the week ending July 14, 30-year mortgage rates rose 5.51%. This was down 2022, a high of 5.8. There's your volatility right there. We're going to get deeper into that when we talk about what NAR is talking about here, National Association of Realtors. REDFIN and NAR pretty much like, if you need to know exactly what's going on, you don't want to pay attention to what they're saying in the media, you definitely want to look here. You don't want to keep paying attention to the nonsense, right? Because I can promise you, when it comes to what everyone's talking about the facts, and they're not just stirring it and creating a media frenzy back and forth about the information that's being poured out there and given to you. You don't want that. You don't want that hysteria. You want to know because you're planning for your future, right? Or maybe you're an agent and you're out there and you're trying to figure it out. You're like, all right, listen, I got to know what to tell my clients because right now my clients are asking me and I don't know what the heck is going on, right? So I don't want you to do that. I want to make sure that you got the facts down, right? So looking back over here again, we see this, right? Fewer people searched for homes for sale on Google. Knew that was coming. No one's looking. You know what they're looking at? They're looking at their bills. The seasonally adjusted REDFIN Home Buyer Demand Index, a measure of requests for home tours and other home buyer services from REDFIN against agents, was down 18% year over year. down 18%. Touring, July 10th was up 1%. The start of the year compared to 23% increase the same time last year. Mortgage purchase applications were down 18% from a year earlier during the week ending July 8th, while the seasonally adjusted index was down 4% week over week. Amazing. I love the data that they drop on this. The median home sale was up 12% year over year to 393,000. This was down 0.7 from the peak during the 4-week period ending June 19th. A year ago, the median price rose 0.9 during the same period. Year over year growth was down from March peak 16%. You see what's happening here? So what does that mean? What does all that mean? Look, new listings of homes for sale were down 1.7% a year earlier. So you got more homes for sale right now. Why? All right, why? We have some panic situations that are happening. We have people that are in situations right now where they have to make a decision. Okay, they're like, all right, I can barely hold on to my bills or what have you. What exactly am I going to do? You still have the people that need to sell that are trying to sell. It just is what it is. They have to do what they're going to do. So that's a given, right? Then you have those that are in distress situations, right? They're just like, you know what? My house is upside down. I'm behind 3, 4, 5, 6 months in payments right now. Gas is finally easing up a little bit. I can't make enough money, right? So you have to look at those scenarios. Houses are going to be for sale. So let's see. Is it all relative? If the price is going up and buyers are coming down, prices need to come down if you really have to sell, right? But is it all relative in the sense that if my interest rates are going up for that same property and the price comes down on the asking, and then I make my offer and we get accepted or what have you, I'm still paying a bit more in my monthly payments according to my mortgage, depending on how I qualify, right? If you're qualifying at a certain point. So those are all the conversations that are going to be had. So it's important, you as an agent, right? Or you as the buyer talking to your agent, have the conversation about, all right, so what does that payment look like? If my mortgager, right, deal with a mortgager because they can shop out your best rates. Don't go directly to the bank because they are very conservative and they're going to give you one number. So let's not do that. Let's go to a mortgager who can shop you across the board and help you find the best rates, okay? Plus that person's hungry. Okay, so for you mortgagers, you're gonna love me for saying this, but this is what you want. Buyers, you wanna go to a mortgager. They don't get paid till your house closes, so they're hungry for that deal. You're dealing with a bank, you're dealing with a 9-to-5 employee, and they'll get to it. It's in their stack, they'll get to it. They have an agenda, they have to follow their agenda. They're gonna get to the files and say, oh, it's lunchtime, they're gone, right? They have to take their lunch break because the business forces them to take an hour off, right? So they're gonna go take their lunch break. Guess what? They came in when it was time to go to work. They have to go home when it's time to go home. There's no overtime. We're not paying you for that. Get it? So be smart about that. All right, so let's get away from that. That mortgagers, I just sold you another buyer. Okay, so right now we understand that you need to have that conversation. You need to be able to get right in and really figure out what your numbers are going to look like, right? If you're borrowing this much and your principal is this much, how much am I paying? Is an adjustable rate mortgage necessary? Is that something I should be getting into? Or maybe I shouldn't be having that conversation at all. Should I just jump in at the rates that I'm going to jump in? Oh, you know, what do I do, right? So you want to have that conversation between you and your mortgager and your agent, right? So you can do exactly what it is that is going to put you in the best situation as possible, right? To purchase your home, right? So that's the conversation that needs to be had for your investments. My investors, they have a different type of conversation. My commercial people, they're looking at numbers, they're looking at the value of property, they're looking at the returns, and they're like, all right, so I'm not borrowing if I don't see the exact cap rate. I want to be able to buy at the cap rate. In other words, you know, your cap rate is based off of the valuation, right? So let's say your business is making so much a year, right? So you're going to divide that net number of what your business is making a year, right? And you're going to divide that by the purchase price. Now, first you want to divide it by the asking price, because then you're going to look at it and say, whoa, is that cap rate even worth it? Should I give them what they're asking, right? Then you're going to figure out what your offer price is going to be and divide it by that number. And look at that cap rate and be like, oh, so you're going to get a decimal, a zero, and some digits after that. You're going to move that decimal over twice backwards, and that's your percentage, right? If you see a percentage that is 5.5 and up, 5.5 is a break even. Your business is going to break even based off of that net. Now that's assuming with due diligence that that net is a true net and not inflated because their numbers are skewed a little bit. So that comes down to the due diligence on how you did business with them, right? Then we have whether or not, right, the expenses are broken down and so forth. So once you've seen that and you understand your cap, 5.5 is break even. Business is paying its bills. Okay, whatever you buy, the business plus the land, right? It's all covered, right? Then you have something called DSCR rates. That's 1.0 and up. 1.0 means it's covering its bills. 1.1 and so on means that there's actually going to be a profit made after the fact. That is a number that the lender is looking at, right? So they want to know that whatever you buy plus the land is actually going to pay their debt, the borrowed debt you borrowed from them. That's what they're calculating, right? Plus put some money in your pocket. That tells them that there's a success there. And then they're looking at the projections moving forward based on inflation and so forth and how you're going to be able to pay them back, right? So these is just a system of you know, rob Peter to pay Paul kind of thing. But so that's our credit industry, right? So that's really the breakdown there. So when you're looking at stats and sources that I'm giving you, like REDFIN, National Association of Realtors, and really putting the information together so that you can understand a little better, that's what's key. That's what you want to do, because otherwise you're setting yourself up for probably not a very great situation, right? You don't want to get into that investment, and the less you know about the investment you're getting into, the higher the risk is, right? So don't make it risky. Be knowledgeable. There is no risk. Your investment is a success, right? Diving right in, we want to move right over. And so I wanted to tell you guys what NAR was saying, and it says the volatility in the mortgage rates as recession fears grow. What do they mean by the volatility? It's right there, as plain as day. We were 5.3. Before we were 5.3, we were higher. See that? Now we're at 5.51. That's coming up from that 5.3, according to Freddie Mac. Now, I promise you, at the end of this month, and it's not the promise you want to hear, we're coming up again. There's your volatility. Why are we coming up? Well, when the CPI jumped 9.1%, like it jumped on its own, right? So because it jumped, there's our increase, right? So you want to pay attention to that, because that tells Federal Reserve we're still headed in the wrong direction. CPI is still going up. Inflation does not appear to be moving in the direction we need it to be going, which is backwards, right? So we're going to have to tighten up a little more, and they will. And when they tighten up, because their goal is to come down. Now, how realistic is that 2% that they want to get down to? I don't think that's very likely. Not anytime soon, maybe in the next 2-3 years, if we're lucky, but definitely not anytime soon. Now, can we get closer to 4%, 6% before that? Yes, 6% maybe by the end of Christmas. Looks possible. Let's see how much we keep tightening up. But to do anything further than that, I almost feel like we're playing with hopes and dreams right now. You know what I mean? I just don't, I don't see that. I really don't see that there. I'm looking, I don't know. Look at this, 30-year fixed rate mortgage rate, average 5.51 with an average of 0.8, right? Come on. Oh, you know what? I can't wait anymore. Look at what Google said. Google said, according to July 15th, that is today. Nope, that's Friday. I'm off. So, according to July 15th, close of business, 30-year fixed. If you are between 700 to 719 credit, look at that. 6.67%. 15-year fixed, 5.15. 10 to 6, ARM, 6.3. First of all, I didn't set that. I don't know who's doing this 10 to 6. Whoa, right? But holy moly, guacamole. Look at this. This is insane. This is Google. You guys can check this all day long, right? You can play around with this. Oh, my credit's way better than that, right? There you go. 30-year fix, 5.9. That's Google playing with you right there. How about the apples? That's Florida. 20% down payment, $300,000 loan. You know what I mean? So it's there. It's as plain as day. I can't make this stuff up. That's I mean, come on. So, you know, looking at that, I say I'm going to jump over to CNBC and give you some of their updates. So they're talking about the top 10 states right now when it comes to the stable market. And I want to show you guys what they mean by the top 10 states. But, man, it's not looking good now. It's not looking good. So for buyers that are looking to go out there and get the deals, get ready, because sellers are going to have to back down. It just is what it is. You can't play this game any other way. If your goal is to sell, you want to get it sold, you're going to have to come down to the price that the buyer is going to pay. If a buyer says, hey, you know what, let's figure something out, seller, you might want to listen to the buyer and say, hey, so what are your thoughts? Let's get to an offer that you're going to sign, and let's negotiate from there. What else are we going to do? We're just going to sit on our hands and stare at the market? Neither one of you can control that. What you can control is the negotiation that you guys have between each other. That's what you can control, right? How you feel about that? What are you going to do? How are we going to negotiate this? You know, you have to remember your goal, buyer and the seller. And at the end of the day, you want and the other person wants to give, right? So you want to make that decision, the most sound one as possible. Neither one of you want to get ripped off, right? You both want to get the best deal, right? And looking at this economy, you have to remember what you're doing. Why are you in this? What's the purpose of all of this, okay? And once you understand that and you guys communicate thoroughly, and you got agents that are sitting there and are actually knowledgeable, can have this discussion, right? Because you guys aren't both talking to each other, so it's really you to the agent to the other person on the other side, and they're kind of like mediators, unless you are one agent and you're handling both, so you're a transaction broker at that point. Whatever the situation is, it comes down to negotiating, right? Whatever the terms are, make it happen, right? Because we can't control these rates. There's nothing we can do about that. Let's get into what they're saying here. Coming over here, CNBC. These are the top 10 states with America's most stable housing markets, right? Now, let's see what they say. Key points: rising mortgage rates, a reflection of Federal Reserve's efforts to curb inflation, are rolling the U.S. housing market. Rolling. Many forecasters now believe the market could cool considerably following years of explosive growth. Some states will fare better than others because companies seek locations where housing situation will be attractive to employees. CNBC's America's Top States for Businesses study considers the health of each state's housing market. The three most important things in real estate: location, right? Location. So, all right, let's see. Top 10. South Dakota. Whoa. South Carolina. Now, what are they basing this off of, right? Underwater mortgages, foreclosure rates, states per 1,000, appreciation, economy rank. Then we got Arizona, Vermont, Tennessee. These are all the most stable going backwards. So we're going to see what number 1 looks like in a second, right? Idaho. Look at that. They even show a new home sign there. Texas. Look at that development there. Almost looks cookie cutter. Florida is number 3. Single family home available sign in St. Cloud, Florida. Ranked number 4. Grade A. Appreciation 25.7%. Come on down to Florida. Washington. And number 1, Utah. Get out of here. No matter how you look at it, the housing market in Beehive State, is buzzing. Prices are rising at the 2nd highest rate in the country, but with the nation's fastest pace of new construction. Plenty of new inventory is on the way in Utah. Foreclosures are manageable and home equity is strong in the top housing market in the nation. Holy moly, 27.1% appreciation. Foreclosure is 1 in 2,063 housing units. Amazing. I don't even know what to say about that. Who would have guessed Utah? There it is, guys. Justin R. Harris here. I didn't even tell you anything about me or what the channel was today because it was just so great to get into this topic. We had all this switching back and forth. I had to bring you guys straight to the internet so I could tell you this. I really had to sit down and work and make sure that I could at least get the media over to the switching footage so that I could show you guys directly to the page what was going on. I really appreciate you guys. You know who I am, Justin R. Harris, commercial real estate, right? I'm the director of RCA, which is Realtors Commission Commercial Alliance, right, of RAPB. Right, my goal, my aspirations is to be director for National Association of Realtors. So I'm really working on that right now as I build my commercial team and we get stronger and stronger and take over the world. No, I'm just kidding, right? So, but I wanted to make sure you guys did that. LinkedIn, we're on live. Facebook, we're on live. YouTube, you're already there. Brought everybody together today for this special one. And I appreciate you guys for showing up, right? Do me a favor. Go over to my YouTube, like, subscribe, hit that notification. You got to do it, right? Do it again if you haven't done it, right? Go to follow on Facebook and follow me on LinkedIn. Let's make this, dude. I'm also going to come back. I'm going to go live in a few more minutes because I need to do my business series because we do that every single day. That one will be there for years to come, and you just follow those every single day. Business scenarios, you're gonna love that topic. I'll dig back in. I'm not gonna talk about that one right now. See you guys. LinkedIn, it's a little behind, so I know when I shut this down, LinkedIn is still gonna be going for some weird reason, but it is what it is. I'll see you guys. Thanks for checking in.